Imagine scrolling Zillow tonight. That cute starter home you dream about? The one that popped up for $400K last year? Now it's $550K and gone in a day. The buyer? Not a family, not a newlywed couple, not you. It's a faceless LLC with deep pockets and a plan to turn that house into your next rental. Welcome to the new landlord, Wall Street. For decades, your neighborhood was owned by people like you, families, retirees, landlords with a few units. But after the 2008 housing crash, Wall Street smelled blood. Companies like Blackstone and BlackRock moved in, fast. They bought foreclosed homes by the thousand, scooped them up cheap when nobody else could get a mortgage. What looked like saving the market was actually step one of owning it. BlackRock and Blackstone aren't the same, but they play the same game. BlackRock is the world's biggest asset manager. Over $10 trillion under management. Pension funds, governments, universities, everyone dumps money in. BlackRock takes a slice, invests it, and lately single-family homes have become their hidden jackpot. Blackstone, meanwhile, built one of the world's largest private real estate portfolios. At their peak, they owned tens of thousands of houses through spin-offs like Invitation Homes, companies that quietly bought up entire blocks. They don't fix and flip. They buy, hold, and rent. Then they do it again. In some zip codes, they're the biggest landlord on the block. How do they pull it off? Simple. Cash. Regular families need a mortgage, approvals, inspections, weeks of stress. Meanwhile, Wall Street shows up with wire transfers ready. No conditions. They outbid you by 10, 20, 50 grand. To the seller, that's easy money. To the market, it's rocket fuel for prices. And once the house is theirs, it's off the market for good. Your dream starter home just became your next rental, from the same company that runs your pension fund. What's wild is how invisible it all looks. The house next door doesn't have a BlackRock sign. It has a friendly property manager. The rent shows up online. The repairs get outsourced to contractors. But the profits? They flow straight back to Wall Street's investors, while you pay every month to live in the house you could have owned. You might think, so what, renting's normal? Sure, but here's the twist. The old landlord owned a handful of houses, maybe lived nearby, maybe knew your name. Wall Street landlords? They own tens of thousands. Some entire neighborhoods are 50% owned by just a handful of megafunds and REITs. That changes everything. Take Invitation Homes, one of the biggest single-family rental companies in America. Who started it? Blackstone. After the 2008 crash, they spent billions snapping up foreclosures, then packaged those homes into a giant rental machine. Today, Invitation owns over 80,000 houses across the U.S. Blackstone spun them off, but the playbook stuck. Now other giants copy it. Buy up homes, wrap them in management fees, pump out monthly rent, flip the company for billions later. So how does that hit you? Well, first, higher prices. A young family can't outbid a global fund with unlimited cash. Even if you do, your neighborhood's price baseline just jumped because of that big cash offer next door. And once these giants own enough of an area, rents move together. Want to negotiate? Good luck! Try moving. The landlord owns the next block too. It's not just single houses either. Blackstone's other empire is rental apartments. They've owned billions in multifamily complexes, sometimes entire city blocks. They buy old buildings, renovate them, hike rents, refinance, repeat. And they do it with investor money you'd never see. Pension funds, college endowments, even government worker retirements. So the same teacher paying higher rent might also be funding the landlord through her pension plan. That's the circle nobody notices, and the scale is breathtaking. A few years ago, Blackstone bought a huge stake in Canada's Tricon Residential, 30,000 plus homes in the US and Canada. They took over extended stay hotels during COVID, turned them into longer-term rentals. They've owned pieces of student housing, senior housing. If it has beds, they're interested. All this works because the math is bulletproof for them. Regular buyers can't compete with an all-cash offer. Banks love Wall Street buyers because they don't default. Cities love them because they promise stable tax income. And the tenants? You can't just choose not to live somewhere. If the price is too high, you move further out, into the next neighborhood they're quietly buying too. So when people say, why is rent so high? Why can't I afford a starter home? The answer isn't just inflation. It's a slow takeover, one house at a time, one quiet LLC at a time, backed by trillions you never see. Want to see how far this goes? Look at entire neighborhoods built from scratch by these giants. In places like Atlanta, Phoenix, Charlotte, whole subdivisions are popping up as built-to-rent communities. Rows of new houses, not for sale, just for lease. Fenced in, managed like an apartment block, but they look like the American dream. One front yard, one driveway, except you'll never own it. You'll rent it forever while the hedge fund who funded the builder collects passive income until you move, then rents it to the next family. This isn't science fiction. It's booming. In 2022 alone, investors bought almost 1 in every 7 single-family homes sold in America. In hot markets, that share can hit 1 in 4. And it's not stopping. Rising interest rates? Good for Wall Street landlords. Higher rates mean fewer people can buy, so more people rent. More renters means more rent hikes. And if prices dip, they just buy more houses at a discount. They call it financializing housing, turning your neighborhood into an income stream, just like stocks or bonds. But houses aren't stocks. People live in them. Schools depend on stable families. Communities need roots. But when a neighborhood flips from 10% rentals to 40% corporate rentals, everything shifts. Neighbors move more often. Local landlords get undercut. Maintenance can slip. And when something breaks, good luck getting a corporate hotline to pick up like the old landlord down the street did. So why does nobody stop it? Because your pension fund might be invested. Your city wants the tax revenue. Even governments borrow money from these same giants. BlackRock alone owns stakes in everything. Index funds, ETFs, bonds. The machine feeds itself. Politicians talk tough about affordable housing, but they don't mind when Blackstone shows up with billions to revitalize neighborhoods. The alternative? Empty foreclosures, unpaid taxes, declining home values. No mayor wants that headline. Meanwhile, the renters? They often don't even know who owns their house. Try calling your landlord and getting a clear answer. Odds are it's a property manager working for a management company, working for an LLC owned by a holding company backed by a fund. By the time you trace the paperwork, you're 3 shell companies deep. The name on the rent portal isn't Blackstone or BlackRock, but the rent still flows up the same chain. So next time you see a story about the housing crisis, ask yourself, who really benefits when families can't buy? Who makes money when every starter home becomes a rental? Who gets paid when you give up and sign a lease because there's nothing left to buy? So what happens if you don't want to rent forever? You save, stretch, scrape together a down payment, only to find the next house overbids again, same company name buried behind another shell LLC. Some buyers are giving up. Others get boxed out by endless bidding wars they can't win against all-cash offers. Meanwhile, the same companies promise they're helping. They say, we're providing rental housing for families who can't buy yet. But look closer. They helped make it impossible to buy in the first place. The higher the house prices climb, the more you have to rent, and the bigger the checks they cash. And here's what makes it bulletproof. These giants don't just invest their own money. They use pension funds, insurance funds, sovereign wealth funds. Millions of ordinary people have a slice of their retirement tied to these landlords' profits. So the same young family paying $2,500 a month for rent might also be indirectly invested in the company hiking their rent. That's the ultimate hidden loop. You fund the landlord who locks you out of owning the house. Even cities can't resist. Some local governments partner with these firms to flip rundown properties into rental portfolios, or they offload old public housing stock, replaced with new mixed-income developments managed by private equity. Looks great on paper, but over time, rents rise, evictions tick up, locals get priced out. The press forgets. The money stays locked in. And when people protest, the PR playbook flips on. We care about communities. We're fixing blight. We're modernizing housing. All technically true. But the outcome is the same. The neighborhood gets monetized, one lease at a time. In Europe, it's happening too. Blackstone is infamous in Spain for scooping up entire blocks of apartments after the financial crisis, then raising rents so high that protests broke out in Barcelona and Madrid. In Berlin, local referendums have called to kick big landlords out. But legal battles drag on, while the rent keeps flowing in. It's not illegal. It's not even hidden. Just boring enough that people stop paying attention. Boring is genius. Quiet is bulletproof. Nobody's burning down Wall Street over a single-family rental. They're just paying it month after month, thinking it's just the market. So the next time someone says, owning a home just isn't realistic anymore, ask who made it that way. Who wrote the rules that turned neighborhoods into yield machines? Who buys when prices crash and who collects when you can't? Because when the crash comes, and it always does, these giants are ready. Cheap houses again? Great, they buy more. Prices rocket back up? Even better, the rents go higher. Ordinary people can't hedge their housing with billion-dollar funds, but the billion-dollar funds can hedge your house. So check your street sometime. Look up who owns the house next door, the row of rentals across the block, the new subdivision that only leases. Odds are the real owner isn't local. It's a fund that owns a piece of your pension, too. And until you can outbid a trillion-dollar cash pile, your only option might be to keep paying rent to the same machine you secretly invested in. This is Midnight Watch. Subscribe if you want to see the stories the biggest landlords hope you never Google. Drop a comment. Which hidden empire should I break down next? Because the next time you see a for rent sign on what used to be a family's dream home, remember, for some, your rent is just rent. For them, your rent is the plan.